Hello, we're back. We're going to be looking at XLI. XLI is an industrial sector index fund, and this is by Spider, a Spider fund. Um, I'm I just feel like Spider. I don't know. There's nothing really special about them, in all honesty. They just seem to. They were one of the firms that has multiple indexes, and that's kind of why I chose them. We're going to look at their uh, top holdings here. And as we're kind of digging into this, I just want to say if you have any opinions on XLI or really just the industrial market in general, please share it in the comments below and what you think a good time to buy or sell or really just any of these companies. That would be very helpful to me. So these are the top holdings, and this is probably the most diversified one we've seen yet. The top 10 is only making up about 41% of its total assets. I'm not sure why this is not ordered in terms of weight. I don't know if they just made an adjustment and so it hasn't updated yet. But normally it would show the top holdings at the top. I do believe these are the top 10. It's just they're out of order for whatever reason. So it looks like the biggest holding is in RTX, which I think is Raytheon. I might be wrong. Yeah, it's Raytheon with 5%. Everything else is less than that. A few at between 4 and 5%, and then it's everything is less than that. Most things are less than 2.5%. And so industrial, it looks like we have Caterpillar. I believe this is Boeing, General Electric. Not sure. This one looks familiar, but I can't think of it. UPS, and then of course Raytheon number one. So I like this one right away. This is the quarterly chart. So I feel like this is going to be very similar to the utilities sector, where it's slow consecutive growth. But what we want to do here, just to start off, because it does seem very similar to our utilities one, we're going to look at its. Whoops, that's not the line I wanted. We want to add a trend line in here just to kind. I picked it again. We want to add a trend line in here just to kind of get a scope of what kind of seems to be the range for this. And I feel like I could draw this in either way, but to try to clip most of the bottoms, it looks like right around here would be like the bottoms. And so you can see we've only gone below it one time back in, it looks like 2020. So that makes sense. That was a very bad time for everybody. And of course, it hits the industrial market too. And then we'll add in another trend line to try to catch what looks to be like most of the tops. And again, it's going to be skewed slightly, like these aren't going to be perfectly parallel lines. But that seems to be hitting most of the tops, especially from like 2009 through about 2020. And then most recently, it's gone outside of the range, and it's currently, it looks like, outside the range. And so now let's scale it back to the past 3 years just to see how it's holding up. And so we have 2020 back here, and then most recently is up here. You can see a lot of it is within those marks. It's actually above this, so I definitely don't want to add at this point or even start a position because I don't have this one. I'm just going to update my chart here while I'm looking at it. So it's currently at 102, and I just put in today's date. So if I were to draw in some like our horizontal lines, because that's kind of how I've been marking these out, um, we're just going to kind of show what appears to be like the caps, and meaning the low point and the high point. And it seems like um, we're gonna exclude this 2020 kind of surge up to kind of where we drew in our bottom line today, which is at $82, because apparently this seems to be the new bottom for this index fund is right around 82. It looks like after it crossed that line back in 2020, it tested it in early 21, rose up above it, came back down again in mid 22, and then later in like the third, early fourth quarter of 22, but didn't go below that line. So I feel like that's a pretty safe bet that shouldn't go down that low again. Of course, uh, time will tell, but we'll see. And then the cap, at least for now, appears to be 105. So it's nearing that cap, and so right now I'm at that point where um, will it get rejected at that line and come back down, or will it continue to rise? And I say that because, again, if we go back to the quarterly chart, you can see it's been in an uptrend for the past over 10 years. So I think just sticking with the trend lines, I'm more inclined to believe that it will pull back. And so this one, I'm not confident enough, and I don't think the margin of profit is high enough to short a stock like this just to gain like, I don't know, $5 per share. Again, if I was doing it in mass quantities, maybe it would make sense, but because my funds today aren't in that type of situation, chances are I would just buy, I don't know, like 2 or 3 shares of this and hope that it pulls back close to say 100, and all I would make is like $15. And it's, to me, I'm just not that the time put in to do that isn't worth it, because again, to buy and sell something, uh, especially today, I mean that takes literally maybe like 1 minute to set up the purchase and then to track it and sell out of the position, say in a week or two. That would just take another minute. So it's not necessarily the time. It's just I guess it really is the time, because the other factor we have to think about is I'm not going to be watching this on a daily basis. As much as I would like to do that, it's just not my reality today. And so, like, that would be the worst case scenario, would be if I did say short this today, or I don't know, sometime this week, around like if it rose up to like 104 or even 105 and I timed it perfectly, what are the chances that I'm going to circle back to this account and catch it when it's like at 97? I don't know. Maybe it is likely, but again, it's just that margin is it's just not worth it for the risk, in my opinion. Plus, again, we have to factor in it's on a big uptrend. It's been that way. I just don't think it's worth it. So we're just going to keep chugging along, add in another line. It looks like we have another support line here, and we'll just make that green for now. That seems to be like our buy point. If we kind of intersect this, uh, honestly, I'm not really thinking about. I guess if we kind of use this, just based on kind of the knowledge that we have, which is very limited, of course, um, this would be kind of like our fair value line, which is just a little bit below at 102. I'm gonna mark in my buy point would be 96. Can't can't really tell if it's gonna pull back to that range. And then the sell point, I'm just gonna give it an X because I just don't like the idea of shorting this one. Again, because of that profit margin, or that window of error is just a couple dollars. It's just, to me, it's not worth it. Um, but this is kind of how I'm seeing it, at least in the moment. So for this one, I'm definitely not going to add to it. The first time I would even consider it is probably at 102, and more likely I would like it to fall close to like 99, because that point we would then be back in that uptrend window, which is the purple line. So it would be at the very top of it. It would be below what we're calling the fair value of it today, based on just kind of like the support and resistance line we saw back in like the second half of 21 and first half of 22, and we could even see it again where it dropped below and tested it, came back down to this 82 mark, and here we are again. We're back up here. So uh, it would be interesting to see who's kind of pushing this ahead. Uh, but again, everything is very diversified. Nothing is there's literally just one stock that even has 5% holding in this. So I think for me personally, I'm gonna wait on this one to at least pull back to about 99. Well, again, I know that's so small, so I wouldn't complain about purchasing something today if you're inclined to do so. It's just for me, that's kind of, I'm willing to wait. And again, because this one, I'm going to scale back to a monthly chart. So hypothetically, if we bought this one, say 4 years ago at a low point, back in late 2018, early 2019, at about $60, uh, actually, it's decent. It would have gone, it would have gave us about a 66% return in that 4 year period. So pretty good. Obviously, there's better options out there. If you would have taken a individual stock, whether it's like AMD or something, but overall for an index fund, I feel like that's pretty solid. Definitely better than the utility sector that we looked at, where the same type of jump might have got you say 50% or 40%. So it's not bad. I think overall I do want to be in this sector because it does seem to be continuously growing. It's just I feel we can get a better price of entry point in this stock. And so preferably I'd like to wait to like 95. That's just how I see it. I'm willing to wait on something like this. And of course, if we see it continue to rise, maybe we just need to kind of modify our trend lines or something like that. But overall, that's just how I see it today. If your opinion differs, please let me know in the comments. Let me know your thoughts. But that's just how I'm seeing it, especially since we do seem to have, uh, you could play it that way where it just kind of bounces between these lines. Maybe we're setting up for that type of reaction for this year. That's possible, where we just kind of bounce between 96 and 105. So I think it's definitely possible that in like a month or so we test 96 again. And at that point, I'd like to at least buy one share just to say I have it. And if it drops lower, I'll dollar cost average in with that low of like 82. That might come up again. It's happened before a couple times fairly recently, about 9 months ago. 9 months, maybe 6 months between, yeah, 9 and 6 months. That's when it's reached that type of low, and it might happen again. And even if it did, it would still be in that upward trend. So I definitely feel like all of that is possible. And so just knowing where it is right now, it's above our trend line, so I think it's overvalued. It's above our fair value line. So again, that's against it again at this point today. So that's how I see it. Um, so I'm just share my spreadsheet over here. We have the industrials right here. Uh, don't feel like it's time to make any move on this one. I marked it X in the sell point because I don't feel like this is a sector that you should do that type of play with, because again, overall long term, it's going to continue to go up. And so yeah, it's just not worth it to me to kind of make uh, like have a little bit of stress over such a small profit margin. I just don't want to deal with that. But this is how I'm seeing it. So it's currently 102. I would consider buying it at 96. Looking at the chart again, the earliest I would even think about it is probably 100. I'd be like, maybe. If it dropped down to 99, I'd be like, okay, I might pull the trigger. But then 96, I would definitely at least buy one share in this. So that's how I see it. I hope you enjoyed this. Please like, subscribe, and I'll see you on the next one. Bye.